Hey guys, what's up? It's Chad. Wanted to catch up on the markets today because it was super exciting. This is a fun day today. So we've had these boring markets, over the last couple weeks where it just hasn't done anything, and finally we get a decent move today, to the downside, no less, which is interesting to me. I was actually a little bit short. If you've been following along, you probably know that. I'm going to show you the S&P 500 here in the bottom right-hand corner of your screen, and boom, we got a nice move today. Uh, Almost 2%, 1.8% down on reportedly on news that Trump may have obstructed justice, which would be obviously a bad thing for his presidency. But we'll see if that bears out. It's hard to know, and it's also hard to know exactly how much of this move is due to the news because there are lots of things that affect the market. We were basically due for a downtick for a long time. We've been trying to break this 2400 level on the S&P 500, and we eked above it very slowly up to 2405, but we were not able to really make a very strong move upward. And a lot of times, if you're breaking a milestone like that, you'll find a really decent move. But today, we had a huge move down on really big volume. It's pretty convincing. Who knows if we will make it down to this 200-day moving average at 2255. It's always a possibility, but at least we broke through the 50-day moving average, which is this blue line right here. And I drew this channel here. So if you connect all the highs and lows over the last several months, you get that line, and then you also get this line, which is sort of parallel, and it makes a channel. So we're back within that channel. We were hovering above it. Now we're back within that channel. And it was a pretty big gap today, but you can see there's a lot of volume within that gap. So a lot of times a gap will close, and you might see that eventually. You might see a move up to 2400 to close that gap. But in this case, it's not a foregone conclusion. Now let's look at the TLT in the top left-hand corner of your screen, which was also very interesting because we had a really nice gap up and a nice move up in bonds today across the board, but I'm using TLT as an example. But if you take a look at, speaking of gaps, here we had a gap up here back in February. We had another gap up here back in February, the early February, and those all closed. So you see that we had moves, subsequent moves down after that gap. So just because we gapped up, and this is a pretty nice candlestick, it doesn't mean we're going to necessarily move forward or higher. Even at the last high back in April, we had a really nice move up to 125, remember? And then moved off of that back down to 120. So definitely not a foregone conclusion that we're going to move up. Although it was pretty nice volume today. But interestingly, if we look at some of the other asset classes, so on the right here I have gold. So this is a GLD, and I have a trend line that's been going upward since December, basically since the new year. And here we go. I'm drawing it along for you. And we basically broke that a couple weeks ago, and today retraced up to that. So that happens a lot, right? So if you break a trend line, you'll break through it, and then you'll come back to it before you move back down. So if that's the case, and you can also see that in oil here. Oil in the bottom left-hand corner of your screen was in this nice uptrend. Broke that a couple weeks ago, about the same time as gold. And today, and the last couple days actually, reached back up there to the trend line. And a lot of times what you'll see is a continuing move downward. So both gold and crude oil look like they could be moving downward. In fact, which could mean that maybe this move in the S&P 500 and in bonds is a head fake. Because if people are rushing to gold because they think the market's going down, but we think that gold may go down. That could be positive for the stock market, which is really interesting. Let's look at one more thing here. I'm not sure if it'll come up here. There we go. Okay, US dollar. So look at that nice move over the last several days. Pretty impressive. So that would be bad as well. A lot of the people in the news are talking about how this move up in the dollar was due to the enthusiasm after Trump was elected, and we thought that business would go gangbusters. But right around the new year, the dollar started moving downward. Possibly because maybe the dollar knew something that we didn't, foreseeing that a lot of the policies would not be enacted very quickly or might not be enacted at all. So over the last several months, we can draw this channel, and we've basically broken below that. So you could easily see that the dollar right now is basically at a level of support, but it may fall somewhere between 94 or 97, may fall back into this channel. So that's very interesting as far as trying to glean things that the market is telling us. They say that the markets foreshadow what's going to come. They can tell us a lot. A lot of people talk about copper being Dr. Copper and telling you how the economy is going to do or whatever. Whether that's born or not is debatable. But in any case, we see copper and gold acting that way. Anyway, all right, everybody, have a great afternoon, and we'll talk to you later. Bye-bye.